Intro. Welcome back to the channel. In our previous video, we talked about moving averages, one of the most fundamental tools in technical analysis. Today, we are going to take that concept one step further and talk about the MACD, which stands for Moving Average Convergence Divergence. It sounds complicated, but once you understand what it is and how it works, you will find it to be one of the most powerful and practical indicators available to any trader or investor. Let us get started. Section 1. What is MACD? The MACD is a momentum indicator that shows the relationship between two exponential moving averages of a stock's price. It was developed by Gerald Appel in the late 1970s and has since become one of the most widely used indicators in technical analysis worldwide. The MACD is made up of three components. The first is the MACD line, which is calculated by subtracting the 26-day EMA from the 12-day EMA. The second is the signal line, which is a 9-day EMA of the MACD line itself. The third is the histogram, which is simply the difference between the MACD line and the signal line, displayed as vertical bars above and below a zero line. Don't worry if this sounds complex. What matters is understanding what these components tell you, not the math behind them. Section 2. What does MACD tell you? The MACD tells you two very important things about a stock. First, it tells you the direction of the trend, whether the stock is in an uptrend or a downtrend. Second, it tells you the momentum, whether the trend is gaining strength or losing strength. When the MACD line is above zero, it means the short-term average is above the long-term average, which is a bullish sign. When the MACD line is below zero, it means the short-term average is below the long-term average, which is a bearish sign. The histogram is particularly useful for reading momentum. When the histogram bars are growing taller, it means momentum is increasing. When they are shrinking, it means momentum is fading, often an early warning that the trend may be about to reverse. Section 3. The MACD crossover signal. The most important and widely used signal generated by the MACD is the crossover signal. A bullish crossover happens when the MACD line crosses above the signal line. This is a buy signal. It tells you that short-term momentum is picking up and the stock may be about to move higher. A bearish crossover happens when the MACD line crosses below the signal line. This is a sell signal. It tells you that short-term momentum is weakening and the stock may be about to move lower. These crossover signals are simple to spot visually on any chart and are used by millions of traders around the world every single day. Section 4. MACD Divergence. One of the most powerful concepts related to MACD is divergence. Divergence happens when the price of a stock and the MACD indicator move in opposite directions. Bullish divergence occurs when the price makes a lower low, but the MACD makes a higher low. This tells you that even though the price is falling, the downward momentum is actually weakening, and a reversal upward may be coming. Bearish divergence occurs when the price makes a higher high, but the MACD makes a lower high. This tells you that even though the price is rising, the upward momentum is weakening, and a reversal downward may be coming. Divergent signals are considered some of the most reliable signals in all of technical analysis because they give you an early warning before the price itself confirms the reversal. Outro. To summarize, the MACD is a momentum indicator made up of the MACD line, the signal line, and the histogram. It tells you both the direction and the strength of a trend. The crossover signal when the MACD line crosses the signal line is a simple and powerful buy or sell signal, and divergence between the MACD and price can give you early warning of potential reversals. When combined with the other tools we have already covered, moving averages, support and resistance, and candlestick patterns, the MACD becomes an incredibly powerful addition to your technical analysis toolkit. If you found this video helpful, please like and subscribe for more content on stock markets and economics. Thank you for watching, and I will see you in the next one.